Hey, welcome back to the channel. This is Fred Paselli, owner of Paselli Accounting Services, a CPA firm based out of South Florida. So today what we're going to talk about in the channel is a pretty basic foundational accounting information. What's the difference between debits and credits? Basically, we're going to go into the information, explain what they are, and just give some examples for them. This is a topic a lot of new accounting students struggle with, and they have issues differentiating between the difference between debits and credits. So the first thing we're going to talk about is debits and credits. Throw out everything you've learned in the past related to banking or any other finance type industry. Debits simply just means left, and credits simply just means right. So we're only going to debit or credit specific accounts depending on the normal balance of that account. Now I have another video several weeks back discussing the normal balance of accounts. Now, to figure out if we debit or credit an account, we have to know what the normal balance of that account is. So some examples are assets. The normal balance is going to be a debit. So what that means is to increase an asset account, basically meaning you maybe purchased an asset. You are going to debit that account. Liabilities and equities. The normal balance is going to be a credit. So what that means is if you took on more debt or you recently issued more equity, you are going to credit those specific accounts. Examples would be accounts payables, loan payables, common stock, and retained earnings. So that's the examples I just gave are all examples of balance sheet accounts, assets, liabilities, and owner's equity. Now, the next area we would go into are income statement accounts, which would be predominantly revenue and expenses. Revenue accounts are going to be credit normal balances, which means you're going to increase those accounts with credits. That means right side of the entry. Expenses are going to be debit normal balances. That means you're going to increase expenses with debit entries. So remember, all this means is debit means you're going to put it on the left side of the journal entry. Credit means you're going to put it on the right side. You can also use these as examples through T accounts. T accounts is something that's taught very early on in your accounting career. It's basically a way to see what the account balance is after all the transactions are done. And you would, on the left side of the T account, that would be the debits. On the right side of the T accounts, that would be the credits. So remember, in its whole, debits just mean left, credits just mean rights. So let's reiterate again. Assets and expenses are going to be debited to increase that account. So if we want to increase it, we debit it. Then on the flip side, if we want to decrease an asset or an expense, we would credit it. And then we have revenue, liabilities, and equity. So to increase those accounts, we would credit them, which means the right side, and to decrease them, we would debit them, which means the left side. So a key thing to differentiate with here is debits and credits are always going to be in sync. So a journal entry is always going to have debits and credits that match and equal each other. If they do not, the accounting journal entry would be out of balance. So basically what I want to really focus on is debits and credits simply just mean left or right. The way you're going to be successful in financial accounting or your accounting career in general is you need to understand what the normal balance of the balance sheet accounts are and the income statement accounts. Once you figure those out and you know what you have to debit and you know what you have to credit in specific journal entries, it will all come much smooth and easier in the later accounting classes. So the main things I'm going to reiterate: assets, debit normal balance. That means you would debit it to increase it. You would credit it to decrease. Liabilities, credit normal balance. So you would credit it to increase it, debit it to decrease it. Owner's equity or stockholder's equity, credit normal balance. So you would credit it to increase it or debit it to decrease it. Revenue, that is a credit normal balance. So to increase revenue, if your company made more in sales, you would credit that account. If you have to decrease that account, you would debit it. Expenses, that is a debit normal balance. So if you bought more supplies or office expense, you would debit that account. If you had to decrease that account, you would credit it. A key thing to help you with all of this would be learning what T accounts are, how they work, and how you can keep track of the specific balance of an account. Also, pay attention. Know what the balance sheet accounts are. Know what the income statement accounts are. So you have balance sheet, income statement accounts. Then you even have statement of retained earnings, which includes net income, dividends, and retained earnings itself. Basically, the main thing is learning the normal balance of the accounts, learning what increases those accounts, whether it's a debit or credit, or what decreases those accounts, whether it's a debit or credit. This will be key to learn early on in your accounting career. Make sure you focus on this, learn this, and master it. It will come in handy later down the road, and it will make you very successful in your accounting career. If you guys have any questions, don't hesitate to reach out in the contact information below. Thank you for watching. This was a short video this time. If you have any questions, once again, do not hesitate to reach out below. Thank you.